What does it take to become a consistent trader? Most of the time, traders look for big trending markets to make their move. But as Shawn Lucas explains in this edition of the Trader on the Street Taproom, that's one of the biggest mistakes that traders make, and it leads to huge missed opportunities. But focusing on smaller runs can lead to more successful trades if you catch on to the rhythm of consolidating markets. Watch as Shawn builds up a series of trades in periods where you can predict their movements, narrowing down profit margins, but consistently hitting targets.
If you understand one principle about trading, it's that the market moves from periods, what we call expansionary periods, to contractionary periods. And it's always in one of those states. It's always either in an expansion, either up or down, it's expanding, or it's contracting. It's just kind of pausing, moving sideways. Most people will teach you that the trend is your friend and that you only want to trade when you catch a trend. Does that make sense?
Yeah.
You've heard that a million times.
I used to say that on stage all the time.
Exactly. Everybody says that. And it probably is one of the single biggest problems that traders face, because the market only trends like 20% of the time. The rest of the time it's stuck in consolidations, where it's just kind of moving up and down and sideways. And so if you look at this, this chart here, it kind of tells the story. This is a consolidation to right here. This is the expansion to here. And then from here over, we're in consolidation again. Does that make sense? So if you look at all of the bars, each of these bars is 1 day. You've only got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days of expansion. Out of all of these, there's probably 100 bars on that. And so here, the entire world, thinks that this is where you make money. Well, surprise, this is where you make money.
Interesting.
Because it's in that state more often.
Yeah.
Isn't that fascinating?
It is, because I always think of, we would want to stock trending sideways for specific strategies, but I always kind of assume the majority of people are making money on the big runs, That's where your big money is made. Like, clearly, if you're going to place one trade on this chart, the best place to place that one trade would be to catch that expansion. But as a trader, you're trying to create income, right? What we're teaching you is how to create income out of the market. Well, you'll only have 10 days of income producing price action, income producing market behavior, but you'll have 80 days of not being able to make any money if that's how you approach your trading. Yeah. Gosh, that makes so much sense.
So what we do is we focus in on how do you make money in the markets nobody loves, right? Because if we can make money in the markets nobody loves, that happens the majority of the time.
Yeah, that's 80%
we
of it.
can create consistent income when we're in that market.
That's the thing that's always frustrated me about the markets, is the lack of consistency. Because I would have some trades that were just amazing, good runs, and then I would have like 4 or 5 losers in a row that would outpace that one.
Yeah.
And it was like really hard to consistently know what was going to happen, because it seemed like I wasn't winning enough times. I feel like the ratio of wins to losses was so low that didn't matter if I had those really big runs. It became, I don't know, I would make money once every couple of weeks in a good way.
Yeah.
And that was just not fun. Like, I wanted something that could make me money every day.
And what you're describing is like everybody.
Yeah.
Very, very few traders get to that point where they just, can make money day in, day out, every time they sit down at a computer. Because in order to do that, you really have to master the consolidations. So if you're spending effort, energy in, in learning one aspect of trading, it would be how to make money during those consolidations, because that's where the market is the majority of the time.
That's
just
so
real simple.
interesting. So the majority of, say that one more time. So if you were going to try and be very successful as a trader, you would want to focus on those consolidations.
Yeah.
Because that's where the majority of the time is spent. So that's how you're getting that consistency out of it.
Yeah, it spends so much time there that if you can master making money in those consolidation periods, then you have the keys to consistent success, because it's there so often. Does that?
Yeah.
So
I like
it's just
that.
It's just a function. Now, that's not to say that we can't catch those, because we definitely want to catch those runs. But what do you do in the meantime? So at some point, the market is going to break out of this. This is so messy. I'm going to clear that up real quick. So at some point, the market is going to break out of this range and move into another expansion. And
You call an expansion up and down as an expansion?
uh-huh.
So that just means the market is expanding.
And we definitely want to catch that expansion, because there's an enormous amount of money to be made in the expansion periods.
Yeah.
Right? But learning how to trade on the inside of those consolidations, you can just pick up. Now, we're not going to make big money in the consolidations. And so that's another paradigm shift that you're going to have as a trader, is that, a lot of you come in and you're thinking, oh, I want to make the $10,000 trade or the $100,000 trade, because that's like cool. But what you'll learn is that, a $10,000 trade is the same as, 10 $1,000 trades, or 100 $100 trades. You follow?
Yeah.
And so what we're going to do is we're going to trade more frequently in these consolidations. We're going to reduce our lot sizes down into smaller pieces, and we're going to trade a ton during those consolidations. So in a typical trading session, like like what we'll be doing here, it wouldn't surprise me to place, if we replace, upwards of 100 to 200 trades during this time, because we're going to replace our income, with quantity.
Yeah.
One big trade moves a big distance. We're going to replace that with a bunch of small trades that move a small distance.
Yeah.
And the great thing is let's drop down to a 1 minute chart. The amazing thing is that there's a consistency to what's achievable. Like in baseball, in baseball, you look at that guy that everybody talks about, the guy that hits the home run, right? But what they don't talk about is, how many consistent, people get on base consistently. Like they're just, you can just count on them getting to base. That's why you win a game, and then if you happen to hit a home run, that's fantastic. But the key to winning baseball is getting on base and moving people around.
So that's the way you're looking at this. You're swinging for singles. That home run is there, still available, but they're just not very often. Mm-hmm. And so you've got one guy in 9 that can hit a home run. You got 8 guys that can at least get to first.
One of the biggest ways to make an impact in a baseball diamond is to consistently get hits. The opportunity to get a home run doesn't come often. To get the perfect pitch with the right speed and angle for your swing, you might have to wait a few turns. But that first base is always waiting for you. There will always be market conditions where the profit margins are equal distance from one another. So, what do you do while you wait for your big chance to shine and hit one out of the park? Try to get singles. Every time you step up to the plate, it's a chance to earn the win. Get on base as much as possible and push runs, or good trades, to home plate. When the chance to hit a home run does come, you take it. But during the game, or your trading session, the key to winning the day is to earn that consistency of getting on base, looking for those small pockets of chance. When you do that, you can find consistency and success, so you can toss your bat in the air and win the day.
So the second thing that I teach people is how do you recognize what is a base hit in trading? How do you recognize, when you're swinging for the fences or when you're not? Does that make sense?
Yeah.
Like how can I measure what I should be looking for in a market like this? And so what we do is there's a level of consistency to the market. And so I'm just going to show you real quick. Like if we take each expansion, there's an expansion, there's an expansion, there's one, there's one, there's one, there's one, there's one. Oops. There is, and then it's gonna take me a second to do this. I don't normally do this in the very beginning, but I'm gonna take every run in the market, and I'm just gonna line them all up, so we can see how far each market ran when it runs here. Because this is going to show us where your base hits are. Does that make sense?
It does. It makes complete sense. Sitting here wondering why I was never taught this part.
Most people don't know how to trade.
I'm using that soundbite.
So you're starting to see some patterns like emerge from.
Yeah, like the down runs seem to be.
So here, what I did is I just drew a line from the top of the markets, a market run to the bottom of the market run, or from the bottom to the top.
Yeah.
And I'm not looking it up or down. I'm just looking at how far is it to first base? How far is it to second base? What is a home run? And what you're starting to see here is that we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 moves that are just about all the same distance. They're almost all about that distance.
Right.
Right?
Seriously.
Isn't that amazing?
Every single move. I've never gone to that level before.
Every single move the market has like a rhythm to it, just like in music. It's like boom, 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 boom. So when it runs, this is like the rhythm of that market. It is almost always going to run this distance. Does that make sense?
Yeah.
Now, here's what's amazing.
Is this a one-day chart, you said?
I'm dropped down to 1 minute chart now.
But over one day?
It's the same thing. Yeah.
Okay.
But I mean, we can do this 100 times on 100 different charts, and it's always the same.
Is it?
Yeah. Now, here's what's cool. If this is a 1x move, what do you think these are?
I would say that's a 2x move. Unreal. No way, dude. That is so interesting.
I love it, dude. It's like there is some magic to the markets.
I never realized there was an actual pattern there, even though I've been seeking out patterns in a chart the whole time. I just was never seeking that pattern, the one that actually can show you what each of those runs could look like,
Exactly. Now, the cool thing here, Robbie, is that if you're looking to make consistent income, where would you put your targets?
Well, my targets would be right in those areas. Like they would be.
Yeah, your target would be just like if you wanted to hit 100% of the moves in this, your target would be right there. Does that make sense? So whatever the distance is from here to here would be your target. Does that do you follow?
I don't.
Like if you're getting in at the top and out at the bottom of every move, right? Let's look at the distance, how far that is. So from here to here is about 6 pips.
Okay.
So let's say that you wanted to make money on every single move in this market, every single move. Would you, and your take profit is at 10 pips, how many are you going to hit?
6. I don't understand still.
So if you set your profit target
Okay.
at 10 pips, that means that you're coming here. There's your profit target from the top to that line. So I'll draw that. You're swinging for this much income. Does that make sense?
I
By
think
having
that's
a target at 10. By having a target at 10, you're not hitting all of these trades.
Yeah.
Does that make sense?
Yeah.
So there's no sense in having a 10 pip target.
Yeah.
But so many people come in and say, I want 10 pips out of the market.
Oh, yeah. But that's not its typical run.
It's
So-
not even typical. In fact,
So
you're
that's
going to
your
miss.
2x run.
You're only going to hit, maybe if you're perfect in your trading, you're only going to hit 1, 2, 3, 4, maybe 5 trades. Maybe 5 trades out of this entire chart have the potential to give you 10 pips. So you haven't tuned your target to what the market is willing to give you.
Got it.
Now do you follow?
I do now.
So if I wanted to make money every time, I'd be much more successful having this target right there, which is about 6 pips. Does that make sense?
Mm-hmm.
Because every single move has yielded at least 6 pips.
Yeah.
So if I want to be consistent, I don't go for the big hits. I go for the small hits that will help me be consistent every single time.
get it now.
Every single move in the market. So if you want to be consistent, you have to understand what is that rhythm, what is that price cycle, what I call a price cycle in the market. Because if you know that, now you can put your targets at a very high probability point.
Yeah, so is this going to be the same for every chart? You're going to be able to find the same type of patterns. Now the pip level
It'll
is
be
going to
different.
change and stuff.
For sure.
But you could basically do this with any chart. So is that how you kind of start your day? Do you do this every time? Like, do you
No.
do it, or do you get to the point where you're like, I know this is the type of moves this type of currency makes, or
Yeah.
whatever?
So if you look down here, my profit target right down here is a 2 pip target. So I'm only going for usually only half of that move. So that's my target. And why do you think I do that?
Just because now you've increased it even more?
Because
Your
it's smaller. Yeah, because I'm never going to get the very top of the market, and I'm never going to get the bottom part of the market. But there's a really good chance I could get the middle part.
Yeah.
And so by dropping my target down even smaller, I'm giving myself a very high probability of hitting those targets every single time I trade, every single time that I get into the market.
Makes sense. So you've got a game plan, actually.
Yeah.
This is stuff that actually works,
This really, truly works.
as the great Phil Town once said.
Yeah, exactly.
Oh, that's too funny.
Yeah, that's awesome. So most people, I'll just tell it to you like this. Most people, they have no clue how to make consistent money in the market, because they don't understand this concept of the cycles and the
Yeah.
price cycles in the market. And I just showed you just randomly how consistent it is.
Yeah.
So most people, the market and consistency, they're on two polar opposite ends, right? Nobody thinks that the market is consistent, but you can see firsthand that there is a lot of consistency.
It's hard to see consistency when you look at a candlestick chart and you don't know how to read it. It's like
Exactly.
reading a different language, you know. But I didn't realize the language was so easy.
I know.
You know, that's the part where I'm going, oh my gosh, I've looked at thousands and thousands of stock charts without looking at that consistency and looking at where is the easiest way for me to swing for singles instead of trying to even get it right. It's not even about like trying to get it right. It's about playing the odds.
Exactly.
And playing the, you know, the
It's all a
fact it's going to
probability.
stay inside there. Yeah, that probability. So interesting, man.
So that's the second place that we go. Number
At this
one.
point, you have people go, okay, well, show me now. I want to do a trade. Yeah, is that where
Yeah.
it's like, that's the point I'm at right now. I'm like,
Exactly.
okay, I get it now. I get it.
So
You
I
do
show
make it
you,
very easy, dude.
I show you all that because now you understand why I use a 2-pip target down
Yeah.
here. And then what we'll do is now we're gonna reduce our size. So the other big problem that a lot of traders really struggle with is size. They put way too much money on a trade, right?
Been there.
Yeah, everybody does it. I'm as guilty as anybody, you know, especially in the beginning, you know, I'm like, oh, I want to be the man. I want to hit it out of the park. I want to, you know, come home, spike the ball in front of my wife. Look who you married.
Check me out.
But man, it doesn't work that way.
Yeah.
It humbles you real fast.
Yeah.
So what we're going to do is we're going to drop the size down to really small pieces. And because I don't know where this market's really going to end, I have a pretty good idea, you know, that we've run as far as we're going to run right now. Because if we look at that measure where we're at, where this market has run, and we take it over here,
It's going to be in that same range.
we're already pushing towards a 2-pip, right? So I got to let that thing run just a little bit longer. And then what I'm going to do is I'm going to start to sell because that run has already been used up. Does that make sense?
Mm-hmm.
It's already moved almost 2. Now I don't know where the top is going to be. So I'm going to start out small, and as it builds into a level, as it builds into the highs, I'm going to start to expand my lot size. So now what I'm trying to do is catch that turn as it turns or as it moves into that consolidation. Either way, so we're just going to start to build around that. I'm expecting it to start to move sideways or make a reversal at this point. So we'll
And
see.
either way, you're staying inside your range.
The chart tells a story. Their conditions are always up, down, or sideways. And while trends happen, the real profits are made in consolidating markets. You're trying to create income, looking for the smaller opportunities and market conditions no one usually trades. And that consistency can come if you narrow your focus to consolidation periods, because that's how markets behave most of the time. While the income you generate is paramount, you can replace them with quantity. Small trades can make the biggest impact. The more small trades succeed, the closer you are to consistent income. That's exactly what Shawn breaks down in this trading session. Watch the full version by becoming a member of the Trader on the Street Taproom. To get the Hitting Singles trading guide, click the link in the description.